What is up, guys? Mike Wang here. In this video, I'll be talking about pump and dump schemes, what they are, how they happen, and how I capitalized on a pump and dump scheme. So if you want to learn something new, make sure to smash the like and subscribe buttons, sit back, relax, and enjoy this video. So, what is a pump and dump? You can take it quite literally. Someone intentionally pumps the price of a stock or cryptocurrency, and when retail investors join the trend in fears of missing out, they dump their bags on innocent people, taking all their hard-earned money. Of course, this is extremely illegal, but it happens quite often with stocks and more so with cryptocurrencies, especially because there aren't any strict regulations regarding market manipulation in crypto. So today I'll be explaining exactly how this works. So first of all, I'll just refer to market manipulators as MMs in this video for simplicity's sake. But people need to disregard the conspiracy that some Illuminati Rothschild related shadow government that is capable of doing whatever is behind all this scheme. MMs are also human just like us, and they often fail at successfully pumping a stock or a coin, leading to huge losses as well. So it's hard to define exactly what type of people MMs are. Sometimes they're just rich retail investors who use their own money to manipulate the market, and other times they're technicians who specialize in pump and dump schemes. And because they don't have enough money to move markets themselves, they borrow funds from criminal groups. Either way, manipulating the market is highly illegal and you should never do it. So there are a few ways in which MMs approach this. First of all, for both stocks and crypto, they need to target an asset with a very small market cap. Imagine the capital you would need to buy enough shares and to move the market for stocks like Amazon, which has a $1.5 trillion market cap, or coins like Bitcoin, which also has a market cap of over $1 trillion. Instead, they target stocks and cryptocurrencies that are overlooked by most people, with market caps among the multi-million-dollar range. This way, they would be capable of making meaningful market movements with just a few $100,000. The second qualification is that the supply needs to be isolated. So the essence is that the supply needs to be limited, but the application is slightly different for stocks and crypto. So normally for stocks, these MMs have an agreement with major shareholders in which they promise they won't dump their stocks when the MMs pumped their price upwards. This is important because if a major shareholder was to dump all his bags as the price pumped, the pump and dump scheme would fail. And because it wouldn't drag the attention of retail investors, they have an agreement before the scheme begins. Similarly for crypto, what happens is the coin needs to be limited in supply in that the circulating supply needs to be small, and they need to be available at an exchange where there isn't much trading volume. Because if a coin, let's say EGOD coin, was available at Binance and Coinbase, even if the MMs were to pump the coin at an exchange like Bitfinex, what people would simply do is get their EGOD coins on Binance and Coinbase and send them over to Bitfinex, where they can arbitrage and dump their bags at the peak, leading to a failed pump and dump scheme. So in order to prevent this, this coin should have to have a low trading volume at a minor exchange in order to prevent any major whales from disturbing the scheme by dumping their bags. So when these conditions are met, the MMs load up their bags secretly as the price bottoms out, and they come up with a lot of ways to drag the attention of innocent victims. For instance, they could bribe reporters to write fake good news about the stock or crypto being manipulated, pay signal group leaders to scam their followers, and manipulate the price through order books. So when they want to accumulate and prevent the chances of someone else possibly buying up so much, they set a huge sell wall on the ask price of the order book. So here, for instance, let's assume that an MM team wants to manipulate Bitcoin. This is what a normal order book looks like, and they haven't finished accumulating it yet. So they want to keep prices below $7,600 $7,500. So what they would do is have a huge sell wall set on that level so that if anyone else wanted to sell their Bitcoin immediately, they would have to sell below $7,600. And this would mean that the MMs get cheaper Bitcoin and they get to maintain the price level at a level where they want to keep it that way. In a similar context, if they wanted to pump prices upwards, what they would do is have a huge buy wall at $7,500 so that if people wanted to immediately jump in and buy Bitcoin for some reason, maybe because there's some good news or maybe because they received a signal that is potentially bullish, they would have no choice but to buy at a price level anywhere above $7,500, which would immediately drive prices upwards and ultimately lead to a huge pump. So these MMs have fake buy walls and sell walls that they use to manipulate the market sentiment and induce the emotion of greed or fear from other innocent people. When these MMs are done accumulating, they now get innocent people to buy their bags. So these MMs have fake buy walls and sell walls that they use to manipulate the market sentiment and induce the emotion of greed or fear from other innocent people. When these MMs are done accumulating, they now get innocent people to buy their bags. These MMs are usually signal group leaders or have connections to other signal group leaders who can wield massive influence over tens of thousands of people. They recommend the stock or crypto in the signal groups, and these innocent people immediately buy into it in fears of missing out. And as the price pumps, the MMs gradually sell their bags and take money from these retail investors who are now left with useless bags that they overpaid for. Pump and dump schemes are essentially scams, but for some reason they're glorified by the media as if it's something cool to do. But keep in mind that this is completely illegal and unethical. So let's get to the part where I actually spotted a potential pump and dump scheme and made a lot of money from it. This is a coin called Grostal coin, currently with a market cap of $88 million, but its market cap was around $15 million when I first discovered it. So the market cap was extremely small to begin with. What's interesting about this coin is how it was listed on Binance, the world's biggest cryptocurrency exchange, but most of its trading volume was on a Korean exchange called Upbit, specifically for the Korean won pair. So the GRS BTC chart on Binance looked very, very different from the GRS Korean won chart on Upbit. So condition-wise, this was a perfect target for a pump and dump scheme. Not to mention the fact that most of the trading volume was on Upbit. So let's take a look at the technicals here. This is the daily chart for GRS on the Korean won pair. This is the actual chart I was looking at when I first took this trade, and there are two significant resistance lines here, as you can see. What caught my attention initially was how the overall trend was bearish, yet the RSI and MACD demonstrated strong momentum and strength behind the price action, so I understood that there could be a major reversal taking place soon. So here, for instance, the price was forming new lows and lower lows, while the RSI was creating higher highs and higher lows. Same with the MACD here as well. We can also see the volume spikes where the MMs loaded their bags up. So for instance, on the 7th of February 2019, there was a huge red candle that formed with a volume spike, but the price was intentionally suppressed so that it would close below the resistance line. And interestingly, as we can see, for the blue bearish candles that demonstrated the price bleeding out afterwards, there wasn't much volume to support the downtrend. And then for the other bullish red candles as well, we can see that huge wicks formed on the candles, demonstrating how price was artificially sustained by market manipulators, and the volume spiked to substantiate my theory. It started trading within a triangle, consolidating, and I knew that the price would break out at the apex of the pattern, so I bought my bags at the support of the trend line. This coin ultimately ended up pumping close to 260%, and as you can guess, the price ultimately dumped back down to where it was, and it dumped even further below afterwards. I don't recommend that you guys do this. I don't recommend that you guys trade based on anything that looks like a pump and dump scheme. This is obviously not financial advice, and I would recommend that you guys stay away from shady stocks and cryptocurrencies that have extremely limited circulating supply and that have a very low market cap. Also, stay away from signal group leaders who tell you that you can be part of a pump and dump scheme, and just stay away from signal group leaders in general. So that is it for today, guys. What do you guys think? Do you now understand how pump and dump schemes work and why you shouldn't be part of it? Make sure to comment down below what you guys think. If you like this video, make sure to obliterate the like button. Thank you guys so much for watching, and I'll see you guys in the next video.